With us now for more is Angelo Taningco, Research Head and Chief Economist at the Security Bank. Good to see you again, Jello. Welcome back to the program.
Good morning, Kathy. Thank you for having me.
So how bad could this Middle East escalation be for local inflation as pump prices head higher?
Indeed, the Middle East poses upside risk to the inflation outlook. Last, we saw the central bank cutting the policy rate for a second time this year, and with the inflation outlook revised downward to below 2%. Our in-house view is a notch below the 2% minimum target of government. But this assumes that the global oil price would settle closer to $70 per barrel. So with the conflict escalating, given the US directly involved now over the weekend, we think that the stronger upside risk already looms in terms of the inflation over the near term.
Would you be looking at the Dubai or the Brent crude prices for your next inflation estimates, Jello?
We're looking at both the Brent and the Dubai oil price. And in our assumption, we think that the Brent oil price would top $80 per barrel over the near term in response to this conflict over the weekend. And we are not yet in a worst case scenario because I think the market is still not yet fully convinced that this could escalate into a broader conflict, as Iran and Israel are still the two main players. So basically, locally contained in terms of the geopolitical risk within the Middle East. So, but of course, if this worsens further, in a worst case scenario of above $100 per barrel, then we could see the Philippine inflation moving faster towards the upper bound of the target range of 4%. And of course, that would result in a more risk-off sentiment in terms of the market's performance.
Yeah, but what we do know, Jello, is that prices at the pump is likely to exceed 5 pesos per liter from tomorrow, Tuesday. So would you be considering to revise your current inflation estimates of 1.9%?
At least for this second quarter. For the month of June, we have an estimate that is, of course, higher than the 1.3% last, closer at 2% for this month because, as mentioned, of the rising local pump prices. But still, rise inflation is likely to remain in negative territory. Rice prices are now much lower compared to the same month a year ago. And therefore, that can help temper the inflationary pressures that will come from the rising pump prices.
So we have pump prices on the one hand and rice prices on the other. How might these impact the pace then, or even the idea of the BSP of carrying on with the rate cutting if inflation were to head closer to 5% from where it is now at 1.6%?
So looking at the second half of the year, we believe that rice price will continue to be lower internationally compared to the second half of last year. We have a negative rice inflation. Oil inflation will be more positive for the second half to the same period last year. And therefore, that will be the push factor in terms of inflation, whereas the factor would be on the right, and hence the overall impact coming from these oil spikes would likely to be more tempered as opposed to historic events such as 2022 when we had the Russia-Ukraine war and we saw oil prices jumping by more than $100 per barrel, with Philippine inflation also reaching our target.
So we've heard from the governor himself saying he's going to be watching oil prices, and the other is the peso. It's going to be a problem if the peso falls. Where do you see the peso headed next in the second half then? And in what way can the prolonged higher crude prices influence the dollar? And by way of that, the peso?
Well, it's also somewhat similar to the tug of war between oil and rice, because at the start of the year, particularly since April, we saw a structural change on the US dollar itself. The dollar weakened substantially since April because of the tariffs. Now we are seeing knee-jerk reaction of some uptick on the US dollar. On the dollar peso, also, we are seeing some uptick knee-jerk reaction, but we still do not think that there is a sharp peso depreciation pressure, partly because you still have overall a weak US dollar sentiment. And therefore, we think that the dollar peso will move higher more modestly. And then at the fourth quarter, will again follow its historical trend of moving downward in light of stronger holiday related inflows, such as remittances.
All right, so many moving parts there, but thank you for the insights and putting this all together. Angelo Taningco of Security Bank joining us.